Anyway, as I like to say, everybody, let's get this show started. Good morning, everybody. Oh, I always leave the time up. Why don't I turn that off? Good morning, everybody. My name is Tom, otherwise known as Striking, here in the digital media world. We're here live on DYOR Live on the DYOR Media Network, bringing you the best content. Well, maybe not the best, but really good content all the time, every week, week after week. Hold on, I'm just checking to make sure my streams are working and my mic is on. If you watch this show enough, you know that I have issues with that. Anyway, it is, and I always have to look, September 14th, 2023. The month is almost half over, ladies and gentlemen. The Christmas ornaments are going up in the stores, and soon they'll be building the Christmas markets in the streets if you live in a decent city. If you don't have a Christmas market, you don't live in a decent street or decent city. But anyway, good show for you today. I'm not going to drag it out here with the extended introductions. We're going to get right to it. Bring our technical and analyst and chart guru, Pedro Garcia, to the world here. Pedro, good morning. Pedro, Earth Pedro. Good morning, Pedro.
Hey, can you guys hear me? Hello?
We can now. Welcome to the show.
Hey, good morning. How's everybody doing? Hope everybody's doing well.
Doing well. Yeah, all is going well. Going through some of the show notes and looking at what you've been talking about, and I think what we've been seeing is a fake pump going on here.
Yep.
Going up. Is that what you had said? What happened yesterday?
Yeah. So it's really the biggest thing I want to bring up is just simply that we're moving up. But if one thing I'm always talking about is let's look at the wicks, right? The wicks tell it all. And you can see here that we literally have no bottom wicks, which we'd consider buyer wicks. And so that means that you have, when you have that means sellers are coming in, okay? And as we see it going down, if we see a seller's coming in and then we see buybacks, it means you have a defense against that area, which means that when price comes back to that area, it's going to get defended and most likely go back up. But you can see here, even though we've had some pretty good volume, which you're seeing right here in comparison to the past previous couple weeks, it's really interesting that even though we're pushing up, we're not seeing any defense against these areas. And so we're coming back up to these areas of the 50 period moving average on the daily, as well as the 100 and 200. So most people understand like the 100 period moving average and the 200 period moving average are institutional moving averages that communicate to us which direction most likely we're going to be headed to, right?
Gotcha.
In these area, you can see up here, this is where we're at. Okay, this is the daily. So if you look, can
you zoom your chart in a little bit? Just having a tough time seeing it today.
Let me go ahead, and I want to point this out here, real quick before we do move any further. That what I speak about is not financial advice, but it is for entertainment and social educational purposes only. With that said, let's go ahead and jump right in. I started putting that on there just simply because
it made your chart really small.
Yeah. But now that I've said that, we can sit there and
all right.
I can pull this down here.
I'll make myself smaller again here and make your chart bigger.
It's all good. We can. Let me go ahead and we'll do that here real quick. I can sit there. Boom. Here we are. And
yeah, much better.
Yeah. And we'll expand this here. So the biggest key that I'm looking at, And it's coming back up to these areas. So expect some type of good news, expect something good to happen or be said, because that's how they do it. And then, so with that said, let's go ahead and check out that weekly. It's the same area that I talked about where I was looking for us to come and retest, right? So we had our first test of the moving averages here, and we bounced off of that 8 period exactly, as you can see right here, and then we saw a sell-off. Again, we're coming back up to retest this area to get sellers. Okay. With this said, this is drawn in buyers, so it's allowing the fodder or the novice people to come in and buy up. And who's taking the other side? The institution.
I don't know who.
It would be the institutions. This would be the institutions coming in and playing the game that they always play. So they're pushing the market up into a turnaround area. You can see here that this is a weekly moving average that's playing us. So this is where they're pushing it up. This would be this is the area in which they're pushing up the market to, which is that 27,200 mark, hence to then turn it around. So it's a very interesting play that they're doing it. I always say if they push it up in the beginning of the week, right, what are they going to do? They're going to drop it at the end of the week. So you can see here where we're at. We're also coming up to the monthly moving averages where we have this 20 period as well as the 8 period moving average, and we're bouncing and testing right now that 50 and the monthly 20 moving average. I know I'm trying to keep this very simple, because I did have somebody tell me like, hey, it really is difficult to even understand what you're saying with all the lines.
No, we've never said that in this show before. No, I don't know what you're talking about.
So when he said that, I said, really? He goes, dude, it like, no matter what you're saying, it can make the most logical sense. I can write it down. But he goes, why don't you just take off the lines and just jump from chart to chart? That would make things a little easier. And I go, okay. So that's what we have here. We have our zone down here, where it's a demand zone that I've been talking about, that 20,000 mark area. And then we have the weekly or the monthly, right here. I was looking at this here. The next row that we're going to have a test, if we do decide to go up, is going to be this 40,000. This should have been right here. I don't know why this is right here. That 40,000 area. Come on.
40,000 area.
No,
we haven't talked about 40,000 in weeks.
We have not. So we've already tested the 30,000. Okay. If we do break out here, which I highly just don't think it's going to happen. I really do not. But as a trader, your job is not to be biased, but your job is to look at where the zones are at and what's actually happening. So that's where you need to sit there and look at and say, all right. You can see here that this area here is a strong area of resistance. So if we do decide, if this thing does come down, bounces off of this 20 period moving average, we potentially could see us coming back up and now touching the 40,000 area. We have the halving happening in about...
I can never say it.
Halving. Wow, why is that? We have the...
Having or happening, depending on your flavor.
Yeah, happening. That the happening, holy crap, is happening at... Let's say that 20 times. In April of 2024. So you can see here that either we're going to sell off here and start to see some sell off, or we're going to probably come down and get some major buyers. Now, this one little part I want to bring up. You can see down here, this is our 20,000 mark and 10,000 mark area. Okay. You can see here that these areas here, right, that we hit, okay, were major push-ups. You can see here at the same level, look at all the buyers sitting here. Look at the sell-offs that happened. Look at the amount of volume we saw coming into this area, okay? You can see here at this same level, right, that the volume we see sitting here at these levels is not adequate to the volume we saw at these levels. Now, I get it that this was the frenzy of the 2017 area rally, but I would want to see more volume at these levels here. And again, at the level of 14,000, we didn't see a lot of volume, and we're seeing a tapering off of what's actually happening in the market.
Yeah, that volume chart is a little concerning there.
Yeah, and this is where, again, and now I'm going to bring up another chart here. Oh, come on. I woke up this morning and literally, normally, you know, I'm about 5 to 15 minutes early, right?
Right.
And I literally came up, and my computer, for whatever reason, decided it wanted to shut off. And
yeah, I may have had those issues before.
Yeah, I was like, why are you being a jerk? Don't be a jerk. Don't be a jerk. You know, I need to point this out because I want to show something here real quick. The amount of volume and people buying in comparison to previous periods and times. All right, here we are. Boom. And all right. So I want to point this out because this is something that is really interesting. This is the amount of shares of all crypto transactions values received by region. You can see here that this area that we're looking at, excuse me.
Oh, sounds like the cough button is on.
I'm sorry.
That's all right. Better to mute yourself during that.
Yeah, I hate it when, especially when like you're listening to live, like what we do, and then somebody's coughing, and you're like, "Bro, I don't want to hear you coughing." Like, come on. All right, so here we go. So you can see here that as we're moving here, when we had the route or we saw, long story short, we're seeing a decline in the major countries like America and here we go. You can see right here, Eastern Europe, other areas where we're seeing the market come down, right? And the biggest thing is this: is Western Europe and the U.S. Are some of the primary world where the real big money comes in at, right? And even if it's just the fodder, it's still big money in comparison to the rest of the world. And you can see here that the adoption area, people buying, is going down. We're in a downtrend here. Okay, so we're almost down at, this is 25, where this was more like 28, 29%. Now, can this change real quick? Yeah, but it shows, this is showing easily that we're moving down. Whereas the smaller countries, or smaller areas around the world with less money pool, you can see here that it is starting to push up. So there's an adoption here coming in, especially with the rates changing and them going up. It is cheaper to go through crypto. So I believe that's why we're seeing an increase in more of the smaller third world nations area. But still, even then, it's one of those things that comparison, it's like a 10 to 1, 15 to 1. So it is stifling its ANC. So that's why I do think that we are going to go down here. This is coming up. They need, and I say this again, they need sellers. Okay, we've ran out of buyers as we were going down. You need buyers for it to go down.
Right.
So
what's the buy? Yesterday you told me there was a big buyer group somewhere, and I can't remember where it was. I think you said it was like a 10,000 or something like that.
Yes, and this is the part that people do not want to hear. I actually
no, they don't.
I actually took it off my chart. This is the 10,000 mark area, right here. I actually took it off my chart because I went through and analyzed this a lot more, that area, and the only part right here is this, and even this is still a weak area at that 10,000 mark. We potentially, a realistic area is that 6,000 and 4,000 from a chart standpoint.
All right, Pedro. I know we don't want to end on that note, but before we run off to commercial here, give the viewers the short-term outlook for the balance of the week here. When they come back on Monday, where's the volume and the wicks going to tell us where we're going to be?
Yeah, so most likely we're going to see a sell-off back down to the 23,000 mark. We're going to come back up probably the end of the week, or towards the end of the week. We're going to come and tap that 27,500 area, okay? and then most likely see a sell-off where we're going to retrace back into that 23,000 mark area after, probably by the end of the week. So get ready for
time to get short, ladies and gentlemen.
Yep, around that 28,000 mark area. That's it.
All right, Pedro, thank you for that. We will be back in just a minute, but as I always like to talk about here, before we get to the guest of the day, is I like to mention the people that help me out here, and that's Auditchain here. Auditchain is a company based in Zug, Switzerland. One of these days I'll say that correctly. Swiss Germans correct me on these things all the time. And as I like to say, Auditchain is the presenting sponsor of all the original material on DYOR, a media network. And so instead of having me try to describe what they do, I want you to listen to me actually just describe what they do.
Most of you know that crypto exchanges have been taking a beating about transparency, and many groups out there are trying to solve that, but Auditchain has already done that. Auditchain's protocols and network of validators can mathematically prove that a company's entire financial state, not just proof of reserves, but a proof of state, and whether or not that company is providing accurate reporting and information to the respective government regulators and to the public. Seriously, you and I can check crypto companies and traditional companies' financial reports for transparency and accuracy using a logic and reasoning engine called Pacioli that records its output where? On the blockchain. Seriously, ladies and gentlemen, blockchain technology is now able to be used to check on traditional companies. Behind me is a list of companies that comprise the S&P 500, S&P 100. In essence, the largest U.S. companies by size. More than one quarter, 29 out of 100, have problems with their reports. Remember, accounting and other corporate systems are garbage in and garbage out. So if there are problems with the data out for these companies, in red here, what does that mean? That's right, ladies and gentlemen. There are problems with the data going in. And this was figured out not by accounting or auditing firms and fleets of consultants. This was compiled and reported on by Auditchain's Pacioli validating nodes and took only 5 minutes. It's revolutionary and it's a disruptor technology. Auditchain.
All right, ladies and gentlemen, thank you to Auditchain for that, and thank you to me for telling you all about Auditchain. YouTube has some weird rules. They don't let you run blatant commercials that are inserted by other groups. So you have to make your own. And so when I can either sit here and just read off the text, not do that, but I like to record it, give myself a talking break. But it's so awkward trying to introduce yourself to talk about something you know about. Let me introduce you to myself. It's like, I think that was an Austin Powers line. Anyway, ladies and gentlemen, this is the part of the show I like the most, is getting to learn. Well, I take that back. Pedro teaches me an awful lot about the technical analysis and stuff like that. But I get to learn about things that I don't pay attention to every day. Every day I pay attention to Bitcoin and what's going on in the general market. But there's always new projects that are coming on and new ways of using the blockchain in crypto. Whether the crypto is some crazy token that is based on a cartoon or is based on a stable coin that is just a substitute for a fiat currency in a contract, namely a smart contract. I like to see it when something is new. And recently I got hooked up, as I say, with Auditchain. They're based in Crypto Valley. And as a result, I got to meet a lot of the other projects and people that work over there. It's kind of the hub of innovation. You know, that's tough being an American and admitting there's a hub of anything outside the U.S. I get that. You know, not that we think we're on top of everything, but we do. But in this case, we're not. We're not. Pedro, pay attention to the comments in the StreamYard. Michael's trying to get a hold of you. But anyway, my guest today is Michael Rey. He runs a company, and I had to ask him how to say it. And he told me he's not Italian, but he said it's pronounced in an Italian way, so I got to do the hands. It's Cerchia. Got to say it like that. And I'm sure there's some long name after that also that's impossible for me to pronounce. But anyway, Project came to light. Learning what he does. He's based in Zug, and then of course all over the world as crypto is. And one of the things that is new is the ability to, as you saw from the body and the thumbnail, get a payout for a loss. In other words, offset your risk without having an insurance pool, and no mass insurance for one person in a single event. It's direct one-to-one. But I'm going to let him explain that and introduce Michael Rey to the show. Michael,
hey,
welcome to the show. Of course, I got the wrong thing here. Here we go. Welcome to DYOR Live. As everybody probably knows, we've known each other through Swiss Asset DAO, which we'll hit upon at the end here. But you have come across, you and your co-founder have come across a new way to offset risk. And most people think this is a DYOR show about crypto, and you're getting into insurance and reinsurance and risk management. But I thought this has a direct correlation because you said it uses smart contracts, and smart contracts equal crypto and blockchain. So tell us, Michael, what is Cerchia?
And you really do the hand thing very well, and it comes over so excellent. First of all, thanks a lot for having us on the show.
You're welcome.
Company out of Zug, Switzerland. Been a fan ever since we got introduced, and also talk about Swiss Asset DAO, exactly. But before we started and launched Swiss Asset DAO, Cerchia was the project we've been building since 2020, and I think only with the crypto winter, actually, these kind of real world asset projects have a bit more of a stage and more of a spotlight. And we have been trying to do something very meaningful, I believe, which is really building a peer-to-peer marketplace for protection. And we decisively don't call it insurance, because insurance comes again with a lot of regulations. You need to be an insurer to sell insurance policies in a specific country, in a specific line. So that comes with all sort of regulatory constraints. So what we actually do is more to be understood as a financial derivative, and exactly peer-to-peer. So this is an established concept. Anybody from the financial industry might know swaps, interest rate derivatives, options traded. Peer-to-peer, direct bilateral, without going through intermediaries. And we found that blockchain is exactly the enabler to make that happen. So
Interesting. So what made you say, as we all know, insurance and reinsurance has been around, since international trade started 1,000 years ago. What made you say, wait a minute, let's put a smart contract, and all these people that have been involved in insuring trade, not the most innovative group on the planet, I might add, trade and losses, property losses and things like that they will accept smart contracts?
Mm-hmm. Well, there is a bigger kind of mission that we try to pursue here. And this is, if you look overall in the world, there's something called the insurance protection gap, which is a staggering $1.8 trillion. Trillion dollars by Swiss Re, the largest reinsurance company in the world, estimates that. Which means there are all these losses which are suffered somewhere by someone, not necessarily damage to property, but economic losses. Let's say you have a pandemic, you lose business because you need to close a shop. You have an airport that needs to be shut because you have windstorms, all sort of things. And this is estimated, and this is starting to widen more and more for several reasons. But we thought one important reason here is accessibility of that market, and about $300 billion of transactions cannot be done because simply the costs are too high for settling and kind of processing these type of transactions. And that's where we come in with the blockchain, because the blockchain is on a silver plate, pretty much all that, what you dream of. Automated, oracles can bring in data to trigger transactions. You have collateral in escrow that kind of backs your potential liabilities.
Right.
can always look at it: transparency, auditability, and automation.
So recently, you had your first smart contract get executed due to it hitting an event. Explain to people in a higher level terms, kind of what happened there. How was it set up, and what caused it to execute?
Mm-hmm. So effectively, the blockchain, and it's public blockchain we built on Avalanche and Silica, is the marketplace. Because it's public, you can just go on it with any blockchain browser, but also via our display, I want to say, and it looks a bit exactly like a display, like a market dashboard you would go to. And on that, you can post your own bids and offers to sell or buy protection. So there's always two sides to it in a peer-to-peer market. Somebody who's looking to buy protection. In this case, it was for losses due to hurricanes in Florida. And on the other side, must of course meet or match a seller willing to provide the protection, more like a deposit. And in case there is no trigger event, will earn a very attractive premium. So because it's an open marketplace, these two entities had to find themselves and meet and match. But from that moment on, everything is processed automatically.
So if I used to ship expensive products via sea freight a long time ago, and sea freight insurance for the actual transit is quite expensive. Not because ships crash all the time and sink, but for the compliance cost, the paperwork, the valuing what is in the container. It's expensive. I think it's so expensive because there was so much fraud in it that they have a lot of compliance efforts and things like that. So a lot of that shipping is underinsured. Now, in your market, on your DRT market, is that what it's called? Direct risk transfer market. Could I go and put up a request saying I want to insure, $1 million worth of stuff in a container, and I'm willing to pay this much? Is there anybody that would insure that would take the other side of that deal? Is that kind of how it works?
That's a perfect use case because you have a real-time need for payment in such a case. It's on supply chain interruption. As long as you can decide and agree with that counterparty, whoever is taking the other side, on a data trigger that's reasonably transparent and immutable, that can trigger a payment, then that transaction can happen, right? And you will find somebody comfortable enough to provide that backing their collateral in case there's a trigger.
So it seems like the market itself is a very efficient model to set the pricing, because you can offer, I say I need, or you could request to buy the coverage, or not the coverage, but the swap. Say I'll pay $5,000 for that if someone can insure it for $1 million, but people are like, no, not enough, and then I'll say, okay, 20,000, and then they take that, and we have the smart contract. That in essence is an efficient price market, and so it quickly gives us the value of that coverage, and it probably gives the underwriters a little heartburn. But
spot on, and that has been is completely different to how underwriting currently works. But in essence, it's still important to get some sort of fair pricing modeled to understand, what would be the fair price? What's the risk? And would it be now, as you say, would it be 5,000 or 20,000 or 100,000? And of course, that would be just the minimum expected premium. Above that, you might want to earn something on top, purely because if you only have the statistical fair price over time, you will go bust. As an investor, it doesn't make sense to provide collateral. So you have very attractive and appealing price dynamics right now. If you think about the risk, let's say it's $10,000 currently for even $100,000 cover. What the market normally is expecting is a multiple rather than just a small add-on spread. We're talking about 50,000.
Right.
really massive location. So it's also a very attractive investment proposition. The reason why it has not been embraced to date is really because it's been too complex to access.
Well, so from my perspective, I would be a user of it, and I would be someone that says, all right, I want to have extra coverage or coverage that I can't easily place in an insurance market. But the other side of that is the people that basically want to take that bet that disaster won't happen and earn some interest or earn some return on their investment. How do you find? Where are you finding those pools of people? My opinion is that you would need a large group that wants to spread their risk amongst a disaster in Morocco or Libya or Florida with pollution in China and somewhere else, and and spread their risk around, and invest in a bunch of projects, go on the market and say, we'll take that, and that. That customer, to me, doesn't seem to be easy to find. How do you go about it? Do you have a background in that, or are there people looking for that?
So, yes, I have a background in that, but also there is an established market of risk capacity providers, and those are typically reinsurers themselves. They provide that as a business. But you also have...
Hello, Lloyd's of London, please.
Yeah, we have a blockchain project. Let's see. We have a lot of established funds, dedicated, called insurance-linked securities funds. They do this in size, and of course, they diversify their portfolio globally, normally in different risks, from Florida storm to Japan earthquake, all those type of larger risks that can be protected. And what we did, we said, well, we need to actually bring also some new capacity to the market. It's called capacity normally. What can we offer? Let's see what we can find in the crypto world, because on the crypto side, you have yet a different problem. You have crypto volatility and the need to diversify away from the crypto volatility into real world assets. So on the back of that, we have built exactly that. We have built a bridge to make this market accessible as a real world asset from crypto capacity in a diversified portfolio, liquid, so you can unwind and even trade that exposure fractionalized.
Oh, I hadn't considered the trading of it. On your website, go ahead, Pedro. Go ahead.
No, I was going to ask you. So on the trading side, so these are basically they're kind of going to be like options in a sense, or how are you going to play that trading side? Is it going to be a chart, or is it more or less going to be just like a open free market where it's just simply not necessarily charting, but like what people are willing to trade and agree to with that?
Yeah. So as a base layer, I'd say, right? The open market, and you can access that on your internet, connecting your wallet, direct risk transfer.io. You can link in and effectively start doing it. As long as you have a KYC onboarded wallet, what you do here is not buying or selling a token, but you just deposit your stable coin to make it work hard and earn a premium. So what happens is the buyer and seller meet, they both deposit stable coins, ideally tokenized US Treasury bills rather than just USDC, into a smart contract that locks itself as escrow account, and then it starts to accrue additional yield on top of the premium we mentioned before. So how do you now trade this? There's established practice again in the OTC markets that, well, if you want to close that position, you just go to the same marketplace and you enter an offsetting transaction with somebody else. So your risk is netting to zero, and that's effectively your secondary market exit. Of course, it requires liquidity. However, you don't need a dedicated secondary market maker that provides this liquidity. Now, that is not so, I would say, especially in the crypto world, you rather like tokens, right? You want to trade a token, you want to trade
No, not necessarily. Look, I just want to make money. So
fair enough. Yeah. And that's so one way to think about it is really you can so many different strategies. If somebody sees two transactions, one is selling it cheap and selling it expensive and buying it back cheaper. So it's a risk-free arbitrage. That's good for the marketplace because it provides liquidity to buyers and sellers. So hence, the more
Maker and the taker, basically.
Exactly. The more different type of participants participate in this market, the better for everybody. Right?
Absolutely.
It's a fun game.
Interesting.
Goodness.
You know, it's something, isn't it? It's something. If it finds the right group of people, it will. I got to tell you that the large commercial property owners in Florida, especially in southern Florida or on the West Coast, it would be wise for them to do this because we know my parents live in Florida, and obviously residential insurance is different than commercial insurance, but the number of insurance companies in Florida is shrinking. And the ones that are left are overregulated and prone to lawsuits, and they're not very stable. They're not very stable companies, and so it would be wise for companies to, if you have $100 million exposure for a building, and they'll insure it for about 20 million, not full replacement costs. It would be wise to go see Michael and come up with a swap with an insurance pool of reinsurers. Now, Mike, on your website, I had it up here ago, but I've moved things around. There's a part of your direct marketplace is called direct impact lending. What is that? Is that instead of just getting it, you get a loan and then you have to pay it back? What is direct impact lending?
Mm-hmm. So this is yet an application of what I explained before. And having worked in financial structuring and investment bank for many years in risk management, this is something a bit close to my heart because we really can have an impact on especially emerging markets where people and societies don't have the access to protection. What do I mean with that? It's just, for example, it's impossible to get protection against tsunami or wildfire for your mangrove reforestation project in Myanmar. These kind of things. For affordability reason, trust, cultural, you name it. So this builds part of that insurance protection gap I mentioned before. These transactions just simply don't happen for many reasons, including costs. We know that as well. Nobody actually wants to buy insurance, right? Because you
no,
you pay premium, right? You don't know whether you're gonna get anything back, right? It's just goes against our psychology, right? But our thesis was, well, if we can turn that around, we can create demand. So what we did is, well, we give financing for your Myanmar mangrove reforestation project, so you can actually reforest your mangrove forest. At the same time, we wrap a protection into, or insurance, if you will, into that loan, and by doing so, you protect your loan. If there in case there's a fire for your mangrove that gets destroyed, whatever, you have the protection. As and when that happens, you don't need to pay back the loan. So rather than now taking away a premium from the people who cannot afford this, you give them something to work with.
I get it. Yeah.
And
that's genius. You lend to them, you make the money on the lending, and then you sell them also a swap to insure the loan. And then if anything bad happens, Cerchia still makes the money for the year, right?
Well, it's still, again, right, I think the costs in these transactions need to be so minimal because the sizes are also much lower. You just want to make these transactions happen and you want to facilitate.
I guess that's a good question is in determining the amount of people or organizations that can use your product, what is the minimum and or maximum size that your marketplace will accept?
Mm-hmm. So we have, for more like regulatory reasons, stay in the more like the accredited investor size area. So the transaction size cannot be retail size at a couple of dollars.
Right.
We also believe that blockchain technology might not be the right for that, for high volume frequency transactions, because again, the transaction costs typically are still too high. So what we think here is more like small businesses, up to medium sized businesses with their own captives, projects. So we look at ticket sizes of a couple of $100,000 to a couple of $1 million. The standard transaction size in that market is maybe about $20 million. But the recent transaction we facilitated for Florida Storm, and now it's just a big one coming again, Lee, Storm Lee, was executed exactly the right time. So this transaction has $250,000 in coverage. So imagine a small marina sitting there. They know if the storm comes, they need to close. They need to just
they could lose everything.
They could lose everything, but they will also not have any revenues for period. Even if they're spared, even if their assets, their property is spared,
everyone is left.
Loss of revenue, everyone's left. Yeah. So that's, I think, where we really have the value proposition. These type of risks normally cannot be insured, and nobody will insure them. They're most hardly to measure and model.
All right. So so you've had your first smart contract get executed by the market, by nature, and so where is Cerchia? Where is it in its business plan and roadmap? It's the company is launched. You have products out there, and some of your products have been used. Are you in an expansion mode, or are you focusing on certain markets right now? What's your roadmap?
No, I'm glad you asked, because it's really an important, critical point. We have proven market fit. We have validated this. We took long to build this platform because it needs to be institutional grade security to convince people this works. And now we have demonstrated it works. We can start to really scale and broaden. So there's a lot of marketing involved in the next couple of weeks and months. We need to find partners to come to the platform, as be they market makers, arbitrageurs, be they capacity providers, others. So we spread very widely all around the world to make this a vibrant marketplace. And here, from a pure company perspective, we go into the revenue mode with transactions purely, but also we are heading into a Series A funding round. The worst time you can imagine the VC market is, but we are confident that this is an interesting use case that benefits a lot of people in societies in the long term. So we will get through this and
Well, we can't get very far without someone asking the ESG question. And our commenter here, which I'm sure you can read. Going forward, can this form part of an ESG framework or ecosystem on the blockchain? And I'm not sure the question there, but every company now has to have that ESG question put in it. And how is Cerchia addressing that?
Thank you very much for the question. And that's exactly where we believe there's so many angles to this. One is the product, is the productization of it that we just mentioned before with blended finance. That's more like the S in the ESG side, the sustainability part. So you can give protection and make societies more sustainable because they get that protection. They can build their own sustainable revenues and businesses and livelihoods. There is, of course, also a protection element purely. So we recently had a discussion with a pool that's newly established, willing to buy on carbon credits. They're going to build a pool of carbon credits and invest in those kind of things. But in any carbon credit agreement, you also have some risk that they cannot be delivered. So let's say you have again mangrove forestation, but if you hit by a tsunami, these carbon credits will not be delivered. So what you do, this product can give you exactly that type of protection. So there's so many different use cases in the ESG space that we believe this is a very meaningful way to now apply ESG.
So you're telling me that I can short, in essence, I mean, even though it's an air quote, not shorting, air unquote, but I can short my carbon credit usage as a large corporation for this with your product if I can find another side for the transaction, correct?
Well, the underlying or the settlement is not the carbon credit, but it's actually you have, and you can prove that, right? You have a loss of value in case you, let's say, have a hurricane or tsunami or something like that. And the value that you're going to lose, translated into US dollars, comes from losing carbon credits or future delivery of carbon credits. So
it's a balance sheet item. So
it's in the end, it's also a balance sheet item. Yeah, you want to offset.
Yeah, so you can insure it.
But you're spot on, right? You need to be very careful about these incentives, which means also we will not entertain any type of risks. Let's say war.
Right.
Product's no good.
Sports betting and all sort of other things. It's just
right.
You can influence it, and you set the wrong incentives on all levels.
Right. I could see the sports betting moving offshore to a Singapore direct marketplace.
Well, I mean, there's
anyway.
Yeah.
No, I there's already all sorts of those things all over the world, but we don't want Michael to end up in that business, because then you get visits from other people knocking on your door late at night. But anyway, I get really one major question as we run out of time here. A lot of things in the news lately have been talking about custody. Like during a smart contract execution, during the period of performance, who actually has your money, and if a company goes bankrupt or whatever, is your money in custody or is an asset of the bankruptcy court? In your smart contracts, if someone puts up their premium or whatever you call it, because it's not insurance, and the reinsurance puts their pool of money in, or liquidity provider puts their pool of money in, who actually holds on to that money? I understand a smart contract will lock it, but where does that money reside?
That's exactly what we try to solve here too. We decentralize this escrow problem to some degree, or entirely even, and remove the counterparty credit risk, which is always an undesirable element in these type of financial transactions. So
Silicon Valley Bank.
Fair, exactly. So by actually sending your stablecoin into a smart contract to that address that locks itself, the smart contract is the escrow account. So if you trust the technology well enough, and everything is programmed, so you cannot, you don't have any counterparty credit risk in this sense. No credit risk. Any bank, nobody can touch and influence this transaction once it's started off and kicked off.
So in other words, it stays in the original place, just locked.
In the smart contract,
Right.
Always there to see for you on your blockchain browser. You see my collateral is there. In case now, you don't want to end up with the risk that in case you
get hacked.
Right.
Or you get hacked, right? Like if you get hacked, will that casing where the contract is, that if that casing gets hacked, God forbid it, right? But if it does, is that money then just lost? Is it?
So the smart contract itself, I mean, you need to be careful that the smart contract itself should be, I mean, we audited and all that. Still, there's a risk, of course, can be hacked. But normally, smart contracts don't hack. It's more like that the keys, where you have the wallets, those are somehow being tampered with, or you get access to keys, private keys. The smart contract itself locks itself, so it acts as an escrow account and doesn't use private keys from that moment on. So it's already very difficult to hack out, I would hope. But we also we have additional safeguards planned in a sustainable way going forward. So we have bounty programs that allow for byte hacking, and we invite people to really attack us to then find out how solid this thing is. But also, I think in a future stage, we have actually a whole tokenomics where we sold a token back in 2021, but only a private sale, because the ruling that we need to be able to float it is still pending with the regulators. But that will ensure in the tokenomics to have a reinsurance pool, exactly in case this whole marketplace or these escrow accounts are being hacked. You have a reserve pool that can compensate everyone else who was lost in these type of transactions. Another scenario is that some data that comes with an oracle is tampered with, and you have a wrongfully triggered payment, and that of course is a bad experience for everyone, and you need to someone compensate unless they move the funds back.
So can I have one more question, if you don't mind me asking?
Sure.
In relationship to regulatory situations around the world, obviously, like America, crypto is very much being suppressed. But in, let's say, Eastern Europe, China, other places around the world where it is very much being welcomed, almost against the dollar, how are you balancing the regulatory effects of different regions around the world in regards to regulatory stances on just crypto in general? And even though this isn't necessarily crypto, it still kind of forms on.
Yeah, there's still worldwide regulation.
Yeah. How are you working through that?
Yeah, so this is a bit something where, similar to approach the Swiss asset DAO, we say, well, let's really start in the real world with the setup. What are we actually doing? We are facilitating, we are a technology provider for peer-to-peer, for others to have bilateral contracts. And these contracts in the real world are, of course, regulated. They can be internationally traded as financial derivatives. And we have governing bodies, especially the ISTA, International Swaps and Derivatives Association. You have certain rules, reporting, and so forth. But each individual party to transaction needs to comply in their respective jurisdictions that they are allowed to do what they do, which is entering each transaction. Nothing to do with us, nothing to do with the smart contract. We don't even have a token that you need to classify. So by really sticking to the way things are being done off-chain, but porting this type of legal setup to on-chain, we can always demonstrate we don't do anything else differently than from a legal perspective, then it's already done.
Okay.
Well, that's certainly interesting. Sorry, Pedro, go ahead and finish your question.
Okay. So basically, because this is the contract itself is more set up as a legit contract where you can actually go through and do credit swaps if you'd want to. You're already KYC. You already have a AML, right, anti-money laundering system set up with this. And so that's how you are able to present it and get around laws within certain jurisdictions that don't.
Well, it's not. I would say it's getting around laws. It's that the people have to be legal in their location in the first place. And so if in the U.S. you can enter into a contract with anybody, but in certain countries you can't. Well, I guess in the U.S. you can't enter in a contract with someone in Iran, Russia, and so forth.
That's what This is what I'm trying to say is that let's say somebody in Iran, right, some big sheik or somebody wants to do business and wants to invest into XYZ. How do you get? Is this a way where you get around that, or just simply say, sorry, you're on that list, we can't do business? Because I know where you're at. You guys follow that same.
Right. I would guess that's the case.
That's why, but I don't know. That's why I'm asking the question.
No, exactly. So what we have to do is, and then when you connect your wallet to this marketplace, the smart contract checks whether you have done a compliance test. This is a third-party compliance that will certify your wallet and issue an NFT as a certificate of compliance, a KYC stamp, into your wallet. If that is not there, you cannot do transactions. So what does the provider, Quadrata, check? They actually check exactly how your sanctioned list. You need to submit all your documents. I myself went through that onboarding process, and it's really like you do it with the banks. So once you get that NFT and you get the certificate, you can do things. Otherwise, you can technically not even access the marketplace.
I hate to beat one more time. So the question then behooves. So you're saying, who does the KYC? Is it done through a computer modeling system that goes through and checks everything, or is it done through an actual person who goes through and who has the ability for error, right? And have you guys set this up, or are you guys hired this out contract wise that do it through like banks or things of that nature?
There are third-party providers, specialized in this. So we work here with Quadrato. I think I can say that here.
Yeah.
And they check the wallet. So we don't even, as Cerchia, our company, we don't even want any client data, right? As soon as you take client data into your own universe, you are held by data privacy rules and GDPR and all these things.
Yeah, the GDPR. Stay away from that.
So you have third-party compliance as a service that is done for all these different wallets. You decentralize that part of your business as well.
All right. Thank you. That's good. Thank you, Pedro, for that question. I was wondering about how to keep it legit. And obviously, if you're going through and getting that NFT in your wallet, while a pain in the ass, as they say in English, it allows you to transact in ways that or otherwise just can't happen for large sums of money. But anyway, that's it. Talking about Cerchia. Thank you for that long discussion about it. I understand it a lot better now, and I hope our viewers do as well. Pedro's got a lot of interesting ideas, like, how can I chart this? And but in these last few minutes here, let's talk about Swiss Asset DAO. As everybody knows, I've had Anton Golub on the show a lot, talking about that and talking about what milestones we've been reaching. As fair disclosure, I'm involved in that project. Also, fair disclosure, there's no token involved here. We're not giving financial advice about anything. We're just talking about a DAO being set up in the legal sense, completely legal in Switzerland as an association, which is defined as letting its members run the shop here. Sometimes that's a good thing, and sometimes it's a bad thing. But hopefully, under the laws of Switzerland, it'll be a good thing. Tell us about Swiss Asset DAO and who its ideal clients are.
Now, this is something we're really passionate about, and exactly started out of this, I think, need that we see all over the world, wherever we talk to different parties, and that's the exciting part about it. The diverse community coming to work on this and to become members even of the association. From DAOs to tokenizers to real-world asset custody providers, and. So we have, out of Cerchia, that project, we have learned quite a few things, how to bridge in a legal way between digital asset world and real world. And I think here that's what we want to bring in and bring to other parts of this universe as well, in the real world asset space. So in the member community, and we decisively, I think when Anant and I first discussed this, want to make this a community-driven project, because a DAO lives and breathes and survives and is sustainable by the support of its community. So we have, at this point, especially members, founding members onboarded, which are specialists in their own domain and fields, from lawyers, marketing experts like yourselves, crypto fanatics, but also all the way to Anton.
We'll just use fanatic. You don't need to say crypto fanatic, just fanatic.
It's really we are so humbled by the expertise that comes together to co-create, right? Of course, tech people as well, process people, and from here we build these services as well that we want to provide to others to make DAOs legal. So DAO treasuries diversify into real world assets, provide them a bridge as a service to invest into the real world in an efficient way, in a legal way, not only buying treasury bills, what everyone does now, but maybe a bit more exotic stuff like what we do here and Learn just talked about. There's so many different exciting things, but it's fragmented. This DAO should bring that community together and co-create.
All right. Well, you just explained it to us at the basic level, but you were just at Singapore's Token 2049 conference here, or not here, but where you are. Tell us, what did you speak about Swiss Asset DAO about there? The same thing, or is there a more advanced topic to be spoken about?
No, I mean, it's really still the industry struggles with the basics of legality even, right? You have DAOs, they have maybe tapped into diversifying into real world assets, but it's difficult. it's sometimes being outright dangerous. You can be considered illegal. You can be banned. You can lend to the real world. You can lose all your money. You cannot go to court because you don't have a legal standing. It's in many ways what I normally explain is like a person coming to a border of a country with a suitcase full of cash, explaining, well, I have a lot of money, but I don't know where it's coming from. I myself don't have a passport. I don't have an identity. Please let me in. I want to buy up all your property here. Not going to happen. Yeah. As soon as we tap out of this global DeFi world, go into the real world, it becomes very local. It becomes very complicated, and that's where we want to help both sides to bridge in a legal and efficient way with best practices and promote that again back to the community. So Anton makes here a tremendous job in also educating us and the broader community, helping us. Shows like yours with giving us this stage helps us to do all of that too. So it's amazing that we get all this support.
All right, ladies and gentlemen, we've heard about Cerchia. I'm always going to do that now when I say
you do it correctly.
Right. And we've heard about the Swiss Asset DAO, two projects that Michael is either a co-founder of or a founding member of, and I have a suspicion that they were both created in concert with each other to help each other out in the long run. So good things to come. Pay attention to both of these companies, or the company and the DAO. There'll be, for those of you watching on the replay, check in the comment section below, and there'll be lots of links and all that type of stuff. But we've come to the end of our show. Pedro, before we go, any last comments here?
No, I'm really looking forward to see what you guys accomplished, and really going to enjoy. I actually reached out to you on LinkedIn, so I know I always get some weird stuff on.
He's LinkedIn. A LinkedIn master. Well, thank you, Pedro. We'll see you. Pedro is our last show of the week. We'll see you next week, but we'll chat in between, of course. Michael, before we go, any last comments here?
Thanks a lot for having us, and glad to talk more. And maybe at some point later we come back and hopefully with a lot of business. So yes. Until then, thanks a lot for your support.
All right, Michael, hold on a sec while I end the show here. Ladies and gentlemen, thank you very much for joining us again today here on the DYOR. Oops, I just closed the wrong window. DYOR Media Network. Where is it? Where'd it go? There I am. Sorry. Thank you for tuning in today. We had a good week here. We got a couple of good shows in about some good topics, and today we had a great company on talking about a whole new way to use the blockchain, and it just kind of blew my mind. Probably most of you don't understand the size of the insurance and reinsurance market, and as Michael said, the insurance gap is over $1 trillion, just the uninsured part. So as it goes in marketing, if we can just get 1% of that. But anyway, ladies and gentlemen, thank you for sticking around this long. Thank you for watching the show. I really appreciate it. My name is Tom, otherwise known as Striking, here on the Digital Media Network, and you've been watching DYOR Live. Pay attention to our other shows, Rugged, Ruined, and Wrecked, DYOR Now, and of course, this show, DYOR Live. We'll be back with you next week with more shows. Be there.